Hi, everyone. Mike White here, and welcome to this week's blog post. Um, with all the things that are going on with coronavirus and the mortgage industry and, national pressures coming down, one of the critical pieces of all of this becomes clear and accurate information. And unfortunately, especially in the mortgage and real estate communities, that seems to be in very short supply. If it wasn't already enough, if we didn't already have so much on our plates trying to deal with what's going on right now, many in the mainstream media, the so-called experts, and even some in the mortgage industry, to be honest with you, are telling people now to just simply pick up the phone and call their lenders or call their servicers and, you know, go into forbearance or sign up for forbearance, and that way they can just stop making mortgage payments. And that's simply not true. Forbearance is not forgiveness. And people, many people, and shockingly, people in the mortgage industry, some who will be watching this video, don't really understand what forbearance is. Forbearance is a specific term, and they have, it is relief, but that relief is temporary. And it also comes with a situation where a time when that money has to be repaid. Typically, when you're talking about a 90-day forbearance, which means you're not going to make those payments for 90 days, at the end of that period, those payments are then due in bulk unless you have a written agreement as to how that's going to be repaid. So keep that in mind, that forbearance is not forgiveness. And in addition to the misinformation that's being put out there, we're also dealing with, again, rumors and suggestions and theories about how not paying your bills or not paying your mortgage or going into a forbearance agreement or any of these other things that people are telling them, or they're making suggestions that it's not going to impact their credit. And we've been around this business long enough to know, especially any of you have been through a divorce where you have a divorce agreement and you have joint credit, and one of those spouses fails to make a payment, or you don't properly eliminate a responsibility, and your credit gets dinged. All the paperwork, all the approval by judges in the world do not stop the credit reporting agencies from reporting the truth. And the truth is, in a forbearance agreement, you're not making payments. So let's just go through this a little bit and look at some of the potential credit challenges and some of the questions you may have to ask yourself. Servicers are not going to drop everything they're doing right now and reprogram their entire systems not to report missed payments. And they certainly are going to report non-payment. They're going to report gaps in the fact that payments weren't made. I mean, the reality is they're not going to lie and say an account is current or has been paid when it hasn't. Even servicers, who don't report missed payments as late, well, how is anyone going to explain the fact that those payments were not made? And that if somebody asks for a mortgage history or it reports on the credit report and there's a zero or a blank in there that there was no payment made for that month or series of months, forbearance or not, do you think the industry's not going to know? Do you think they're not going to look? And by the way, don't think for a minute that the mortgage industry and the investors that are out there right now, even some of the very same people who are saying, hey, don't worry about it, it's not going to get reported, you don't think that in the months and years to come, people are going to look back at this period of time and ask for mortgage experience letters to see if you did make all your payments on a timely basis, if you didn't go into forbearance? Good luck with thinking that that's not going to happen, because I'm telling you, jumping quickly into something like this could affect your ability to borrow money well into the future. And now I have to think to myself, why wouldn't somebody be making their required payments? Right now, if you're still working, if you're still part of the community that are working, there's no reason for you not to be making your payments. If you've been laid off or furloughed, well, you've got your state unemployment to deal with, and you've also got the $600 a week that's being issued from the federal government. In many cases, when you combine state unemployment payments with the $600 a week that you're getting from the federal government or will come through the federal government, that's going to represent more net income to people than they were actually making. Think about that. You've got your own state unemployment, whatever that number may be, plus the federal $600 a week. If you're getting $200, $300, $400 a week from state unemployment and another $600 from the federal government, you're getting over $1,000 a week net income. Why aren't you making your payments? So think about this as you're going forward. And let's not even get started with those stimulus checks. So it's really important that you understand that, yes, those stimulus checks are coming, and yes, there may be some strain right now in the immediate. But that's when you pick up the phone and let them know, maybe I want to let you know, did you have no money? When did you stop getting paid? Because if it's been a month since you got paid, your regular unemployment should have showed up by now. And you had no money towards your mortgage payment? Okay, I may understand that. Then call your servicer and tell them you're going to be a week or two late with that payment, to make them aware that it's coming. And as soon as the stimulus check shows up in your bank account, you're going to make that mortgage payment, or you're going to pay that other bill, because it's out there. So let's not use this as a convenient excuse. So as a mortgage professional, as real estate professionals, we need to get the message out there. And I know there's already been tens of thousands of people inundating mortgage companies, inundating their investors, their servicers, already seeking forbearance without knowing the consequences fully of what they're doing. Forbearance is not forgiveness. It's not a deferment. And again, right now, wouldn't you be the real expert? Wouldn't it be great to have an attorney that's a friend of you? Maybe you do a joint video together, do a Zoom call from separate locations if you're looking at social distancing, because these times aren't challenging enough all on their own. But for people, many of whom don't know the difference, they're being told by the mainstream media and some in our own industry that this is what they're supposed to do, and they don't understand the ramifications. So use your ability, your knowledge to get the real facts. Get the information to your people. This is why video, and we've talked about the use of video, is so effective. Now, I know many of companies are putting information out there, and many of you are sharing it on social media. But I'm telling you right now, if you want to be the local expert, take that information, understand it, record your own video, share it yourself on your social media platforms, email it to those around you, friends, family members, clients, referral partners, because now it's more important than ever that you convey your expertise into this market, when people could be making decisions right now that could impact them in the years to come. As always, we're here to help. If you have any questions or comments, it's Mike at imtcoaching.com. We'll talk to you again next week.